Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've bidden a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everyone. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, a lot of news to discuss. A busy show. We have two guests and a lot of headlines. So 13Fs, we'll talk about the biggest filings from yesterday. A lot of earnings as well. TripAdvisor, Marriott, Cisco, Applied Materials. So we'll try to get to as many earnings as we can. NetApp also reporting yesterday after the bell. We're going to talk about this news with Amazon and Bank of America partnering up for Amazon lending. And our guest today, first up at 8:15, we are joined by Marc, Chaikin, founder of Chaikin Analytics. And then at 8:35, we are joined by Christian Magoon of Amplify ETFs. They are the proprietor of the blockchain ETF ticker BLOK. So we'll talk to him about how that differs from the other blockchain ETF that we had on our show last week, BLCN, and all about that space. Joel, you're a little sick today, but you're fighting through it. Tell us how we're doing in the S&Ps.
We're doing pretty good here, Spencer. Trading up 10 handles at 27.07. A little dip off the 6 p.m. open at 93.50. So that is target on the downside if we go into reverse. On the upside, pre-market high 19.50. The number above that is 2726.75. That's your 5-day high, and that's your highest level since you made the low of the move at 25.29. You have crude trading in the red, but just a few pennies here, back over $60. Crude participated in that rally yesterday as well. We got a daily level at 62.09. That's your February 8th high. Gold participated too in the rally, but that's given some back, down 330 at 1354.80. Silver down 5 cents at 16.83. And Bitcoin, I'm looking at the futures here. The futures are up 410 at 96.80, trying to get their way back into triple digits. Triple D, how you doing this morning?
What's going on? What's up?
Well, there was something I wanted to ask you yesterday, and I just, we got busy with the show and everything. But with the Winter Olympics upon us, I just wondered if you could do a preview of the Canadian curling team.
Yeah, I figured you'd ask me about the curling. Unfortunately, I'm one of those Canadians that don't watch a lot of curling. I watch hockey. I think my sport on ice is hockey and not curling. So can't tell you too much. All I can tell you is Canada's pretty good at any sport that is played on ice. So curling, hockey, we're pretty good at. All the other sports, more to be desired.
Have you ever curled? Have you ever done it?
Done it once in high school. You know how they do that like road trip to try out every different sport? You go and throw the big rock down the ice. So I did it once in high school. Probably why I never had a love for the game for watching it, because I never played it. So one of those kids that can't curl.
Okay. All right. We got earnings. We have 13S. We have a small merger. We could talk about the unbelievable rally in the market yesterday. Where would you like to start?
Let's start with 13Fs, and let's start with the big one, Spencer. The Berkshire new position in
Teva Pharmaceuticals.
Yeah. Teva trading up 8% as disclosed by Warren. Dipping his toe into this dough.
A new 19 million share stake in Teva Pharmaceuticals.
And when Warren dips his toes into dogs, they become stars overnight, up 8% here. Teva, so big pop. I never fade Warren, so I know you're seeing a big pop here this morning, but I've been caught fading Warren before, and sometimes there is follow through. This could kickstart. I mean, Teva has been in the doghouse. It needed something to kickstart it. Obviously, had the big run November, December, January, and then since January, it's been straight down. Got a little bit of life yesterday, and then today, kaboom! It's off to the races because of Warren Buffett.
Up $1.56 at 20.89. We were a stick higher at 21.70. That's your after hours high. And that's just after the news came out. A lot of volume being tossed around here too. Don't know if I'd want to chase either. I don't think you're going to get this back though at a gap fill from yesterday, and that is yesterday's high was 1950. So be a little bit patient. Maybe a couple days after this wears off, you might be able to pick it up under $20. But
I don't think so.
No, I don't.
Maybe, you do see, it depends on what the market does overall, but, and we could segue right into the market here too. I mean, you had that 30 handle dip off the CPI number yesterday, which was totally unexpected by me. But everybody else just used that as a buying opportunity. They were buying stocks hand over fist, and I mean big time. And obviously the market came roaring back here. Now you have Teva, Warren's in. There's going to be underneath demand here as it pulls back. So I think you get anywhere near 20. I think you got all kinds of buyers there. Now, that being said, stocks can pull back, so you always want to be ready if you get that opportunity. Do I want to chase Teva here? I don't know. The way I'm playing it, and the way I think, I kind of like the chart. And actually, I bought this yesterday, coincidentally. I like it more today. I bought Valiant, VRX. Starting to look a little bit better on the chart. It had run, obviously, up from 14 to 24, sold off in the recent sell-off here, and it's just been hanging out, kind of consolidating around $18. Now it gets kickstarted, and a lot of people trade Teva with VRX. Why? Because they're both generic drug makers. Both have a lot of debt. Similar, they got similar issues. The debt is the issue there, but both of these companies, make some money. Teva, obviously the one that Warren going in. I went in VRX, and VRX is trading up in sympathy with Teva here this morning.
Yeah, we talked about this chart yesterday. Nice decline, rounding bottom, low at $17, getting a little pop here off the Teva news. And let's see, someone else in the chat here put in some other stocks in the sector: AGN, ENDP, Mallinckrodt, Mylan Labs. Those stocks may be moving as well. But Spencer, pull up a longer term chart here of Teva, and just kind of to illustrate, long-term value investing. This is it. I mean, this stock, all-time high for this Israeli pharmaceutical company was over $70. And then here you come down, into the teens, cut the dividend. So, I mean, that's being patient. This is just like a classical Warren move. And 6-8 months, a year from now, we're going to be looking at this thing at $40 and saying,
you think so?
Yeah.
Wow, then I should be buying if you think this thing's going back to 40. You're a lot more bullish than I am. I think, the thing could take out the highs and start moving up. 40 is a long ways. They still have some issues. Still debt issues. They're trying to get out from underneath it. Both Teva and VRX have so many similar issues. And it's that, they were this whole, borrowing, acquiring to grow. They got too big, got too much debt, and that was basically their downfall in the last few years. Now both, struggling to survive, trying to get out from underneath all that debt. But they're doing it. They're slowly doing it. And that's why I'm betting on a VRX turnaround here now. So it's had the big run. It got a little ridiculous when it got up to 24, just overdone. Now you've kind of had almost a 50% retracement from that 14 to 24. That's kind of why I like the VRX chart. Warren picked Teva. I picked VRX.
What else did Warren do?
What else did Warren do? Warren
added Apple.
Yep,
That's why Apple's trading up more than the market this morning.
He increased his stake in Apple. Let me pull up. I just had it up on my Pro, so let me pull it up real fast. He increased his stake in Apple by 30 million shares. I think now he's at 134 million shares in Apple. Raised his stake in BNY Mellon, ticker BK. Lowered his stakes in GM, Wells Fargo, and IBM. And those are the Warren Buffett headlines from yesterday.
We knew the IBM. He had talked about that, and we actually mentioned on the show as one reason that I was kind of scared to have my IBM position was because I knew Warren was on CNBC and hinted that he was almost out of IBM. So we knew that was coming. So that's why IBM is not trading down on this, because the market already knew this. But Apple, increasing the stake. I mean, Apple, you want to talk about stocks come back. 4 days ago, this stock almost kissed $150. That was when everybody was throwing everything out, baby with the bathwater, $150.24. Here we are looking at it 4 trading sessions later, $169. That's an incredible 12% bounce back here for Apple. Now you start looking at it, coming in now to buy it though. I mean, so late to the party. 170 was the level, 175, and we were worried, and Apple's already selling out before that. Now it's already back up. I mean, yes, Warren Buffett's in. Yes, it's exciting, but you're coming in a big psychological level, a 170. You got some overhead supply up here. I'm in Apple. I own it in my investment portfolio. I've owned it for years. I'm going to stick with it in my investment portfolio. But as a trade, you're chasing now, man.
Did anybody catch this? Because I had talked about 3 of the 4 highs at the 163.80 level. You had 63.40, 63.89, and 63.72. Oh, 4 out, another 63.88. Well, you took that out on the 13th, or no, you took it out yesterday. And once you took it out yesterday, it was gone. I took my eye off it. Trading up, it seems like you got a little bit of a seller here near 170. 169.88 is your pre-market high. I'll alert our traders that there is a daily high at 170.16 from January 29th. So if you're looking for a target here, stopped at 150 on a whole number, and here maybe 170 would be the stopper on the upside. So nice move in Apple today.
Just going to segue back to VRX for a second. Got a good question from Jamie here at Bright Trading. He's just asking me on VRX. I used to say, and I've said this on the show for the last few years, not recently though. I said it's either, this was when it was like $40. I was saying VRX is a 0 or 100. And the reason I was saying that is because if they can't get out from under their debt, they're in a whole world of hurt. If they can figure it out, the stock could eventually be back up at $100. What they've done and why this scenario is off the table is because they've sold off, obviously, some of their drugs. They've sold off some stuff to get out from underneath some of that debt. That's kind of taking the 0 off the table, but it's also taking the upside off the table too, because they were getting rid of good, drugs to save the company, basically. So that's why it's kind of off the table, that scenario now. And it's been a while since I've said that, but I think now you just got to make it as a trade. I don't think this is going to 0 now. I think that they've figured out enough, and they're getting out from underneath the debt enough that the company is going to survive. But it's a matter of how much it's not going back to 250. It's not going back to 150 because they've sold off a lot of their good assets to survive. And I think they might have to even do more of that. So that's why, I am long VRX. I do think there's value here. I do think they're going to figure it out, and they're starting to figure it out here now, but I don't think it's going to $100.
All right, Dennis, BZ Tokyo is asking, did you ever buy any CLVS, Clovis Oncology? Did you buy that a while ago or not? Did you ever get dirty in that one?
It's funny. I do so many different things. I don't think I've ever bought, I've traded it. I don't think I've ever bought in my investment portfolio Clovis Oncology. But it's interesting. A lot of the biotechs, if you want to look at value, and if you want to look at, some of these other stocks here, there's a lot of biotechs out there that are pretty cheap right now. Now, long-term, I don't know. Like I'm in Celgene. We know I've got a lot of biotechs in my portfolio. Some of them have not been, that great. But, something like Celgene starting to look a little bit better here on the charts again. Now, Biogen has been beat up. It's back under $300. Now, that one had a bad day yesterday. So, maybe you lay off one like that. But Celgene, put the bottom in, washed out everybody through 90. And the last couple of days consolidated and had a nice candle yesterday. I think Celgene could run back up to $100 for a trade here even. I own in my investment portfolio, so I'm sticking with the long term. But if you're looking just at pure value plays, there is a lot to be had in the biotechs. Now, there's the wild card is Trump. Or is he going to start attacking pricing like he said, in his speeches from a couple of weeks ago? That's a wild card. So if they start attacking drug pricing, that could put pressure on the whole sector. But if you want to look at, multiples and what stocks are trading at, a lot of the biotechs are trading historically cheap relative to where they've traded in the past.
Okay. All right. We got only 45 seconds before our first guest coming on, Marc Chaikin of Chaikin Analytics. But let's talk about the Cisco kid.
Yeah, let's talk Cisco earnings quickly, Spencer. Can we do it in 45 seconds? Go.
We can do whatever you want in 45 seconds. 63 cents versus 59 cents. Sales of 11.9 versus $11.81 billion. So a beat on the Q2 numbers there. They're also raising their quarterly dividend from 29 cents to 33 cents per share. And the Q3 guidance EPS came in about a couple cents higher. Sales growth for the quarter, they see that at 3 to 5%.
I am kicking myself on this one because I really wanted to buy this stock under $40. I wanted to buy it before it even ran back in November and December, and it just kept running up. And I was hoping for a pullback, never got it. Then what happens in February? I get the pullback. Stock goes under 40, under 39, under $38 actually. And I never pulled the trigger in my investment account. Now it's at 45. So I've missed the boat on this one here again. Unbelievable stock here. Unbelievable quarter. I think about $25 billion buyback. This stock is running on all cylinders here right now. Pullbacks to be bought in Cisco. I unfortunately did not buy that most recent one. Wish I would have.
All right, Doc, consolidating near the pre-market highs, 45.36 looks like your pre-market high. Little egg on my face on this one. I thought 44.50 would be a little bit more of resistance. 44.50 was your high back in January of 2001. Spencer, go to the monthly here because you're in a vacuum area here, folks. So I know it's up a lot. It seems ridiculous, but you start shorting this thing. You just got to be cognizant that in January of or in December of 2000, this stock came down from 55.75. So yeah, there's going to be bumps and offers along the way, but you're really vacuum area on the downside could be a vacuum area on the upside.
All right, I'm going to bring Marc Chaikin in on the fly. This is Marc Chaikin. Right. He joins us every other Thursday. He is from Chaikin Analytics. He's got his
morning, Spencer. How are
morning,
you?
Marc. How's it going? You're alive on Benzinga's pre-market prep. How's it going?
It's going well.
Good. How are you? How are you? I think we last spoke to you before all that volatility, right? It was before that. So talk us through what the last week or two has done for your medium and long-term outlook.
It really is unchanged. We think the earnings-driven bull market will continue because we went into official correction territory, down 10% on the S&P on a closing basis. We've been looking for a W-type bottom, and this sharp rally that we've seen, which may accelerate this morning if the futures hold their gains, has taken us right back up into key resistance area, 50-day moving average, a 50 to 62% retracement of the decline, and our long-term trend in Chaikin Analytics. So I think the rubber meets the road today, and the odds favor this rally running into resistance here and coming back down and giving us a low volume test of the lows at the 200-day average, which is around 25.40, 25.45 right now.
I can get on board with that to a certain extent, Marc. I just look in the only reason that I think we might not retest those absolute lows is we weren't down there very long. Second thing is this buy the dip mentality is back with a vengeance. I mean, we saw a nice dip on the CPI number yesterday at 8:30. We dropped 35 handles in a matter of a minute or two. And what happened? They bought it right back all day, bought it hard, ended up closing strong. We're up here again today. The buy the dip mentality is back.
Well, you're right in that the buyers came in and reversed the market. The problem I have is that the decline was accelerated by this blow up that I'm sure you guys have been talking about for a week and a half of the exchange traded notes based on vol. There were a lot of margin calls that clearly created the chaos leading into Friday's dramatic reversal at 140. So I got to go on probabilities, but that's why the technicals are so important in a market like this. If we run into resistance up here at 720, 2720, 2740, and then start to pull back, and of course we have a PPI number at 830 that shouldn't be a market mover, but sometimes it is, and very often it runs counter to the CPI. So we don't really know what's happening. What we did is last Monday, a week ago, we said put a third of your cash to work. The market opened sharply lower. And that turned out to be a good thing because some stocks that we were bullish on that we were looking to buy gapped down, gave people a great opportunity to go in. So it's really how you handle your money and whether you stay the course or panic along with the sellers that determines how you come out of this, Dennis.
Just jumping over into individual stocks there. What ones were you talking about nibbling your toe into there last weekend? Is there anything still worth nibbling into?
Well, we're telling people don't chase because
don't chase. So lay off right now. Okay.
Yeah, but what we like, Amazon, which turned bullish in our work for the first time in quite a while. The apparel stocks, Michael Kors, you got a huge spike up in the middle of all this on positive earnings. And then the stock gave up over 20%, traded from 70 down to 56, now rallying. You buy that on a dip. Financials, JP Morgan, solid as a rock. You got to own financials in a period of rising interest rates. That's when they lend money and the spreads for lending are better for them. So the major banks, you really want to look at the stocks that made new highs recently and that are strong coming out of the rally. So one of the examples of that, Cisco, up 7-8% pre-market, just blowout numbers.
Yeah.
I don't think that's going to pull the whole tech sector up with it, though. I think the semiconductor equipment manufacturers, Lam Research, Applied Materials, which also had a good report last night, I think these stocks may have broken down technically. There's a lot of money coming out of them. And I'd be watching and thinking about selling these, taking profits on this rally back up.
Maybe getting back in if we were to retest those lows. I hope we retest them, Mark, because I missed the first boat. Like, I bought a little bit of stuff, but I had some more cash I could have put to work, and it was just scary. I mean, when we were going straight down last Friday, I was like, holy cow. You almost get that mentality. It's like, and it's the psychology behind the market. And I've been in the market for 18 years, and it gets me sometimes too. And I had Cisco on my list to buy in the pullback. I had Micron on my list to buy in the pullback. I had a lot of these stocks have bounced back to buy on the significant pullback. But that Friday, when we were down 1,000 points again, I was just like almost throwing up in my mouth a bit, because I am invested in this market. I was watching my investment portfolio get shellacked, and I was like, I can't put more money to work in this. This is too tough of a market. And then obviously it came back hard the last couple hours, and then I missed out.
Well, I agree with you. That's why a week ago Monday, we said take advantage of this panic selling. It's a weak opening on a Monday. Put a third of your cash to work. You really can't buy them on the way up. It's so difficult. And those retests look scary. I'll tell you this, though. If we fail up here at 2720 and come back down into the 2500s, just because everybody is watching that 200-day average, I'm betting it'll break temporarily. That'll flush out everybody. Don't know if that's going to happen, but don't expect that it's just going to automatically hold at that level. So many people watching it. The computers are all going to be programmed. You really have to be careful, but be prepared. If they go to 2450, 2500, then you just open your wallet and you buy stocks, because the earnings are coming in unbelievably. And guidance, Cisco's going to buy back $25 billion worth of stock with cash they repatriated. So, this isn't over, and you've just got to be a believer and stick to your plan.
All right, Mark, we talked about technology, financials. Give us a couple of healthcare stocks you got your eye on.
Well, healthcare, there's some really nice opportunities. AbbVie, ABBV, it's a combination of biotech and traditional pharmaceutical. Again, there's a stock with a powerful earnings report. I think it got up to 120, and then it spiked down to 102 a week ago Monday. Now back up to 114. Great stock. Centene, they figured out Medicaid. They raised prices last year in anticipation of the government cutting back subsidies. They've got an acquisition pending that'll make them the largest Medicaid provider. They're expanding into 8 other states. So they have great management, and they've navigated these choppy waters in healthcare. So Centene and AbbVie, two that I really love here. And then I've got a short sale for everybody. Watch your stops, maybe use options. Shake Shack reports after the close. Now, Danny Meyer, who founded it, is someone I've known for 33 years. He's a genius. His restaurants in New York are where you want to eat when you go there. Shake Shack's another story. I walked by the Shake Shack in Philadelphia Tuesday night at 8 o'clock on the way to dinner. There were 2 people in the whole place. Now think about that. This is a company selling at 80 times earnings. Yeah. There were only 2 people in a major center city restaurant for a company that's being given a premium price, primarily because Danny Meyer has a mystique and he's been a god in the restaurant business. I would short this stock ahead of tonight's earnings report. I'd use options so that your risk is limited, but this stock could drop 20% if they disappoint.
You know what? And I'm kind of on board with you here. It's funny, I have a position ahead of the earnings, but I plan on dumping it ahead. I'm just looking for a pre-earnings run. But I'm kind of on board with you from the fundamental look here. And I've just visited Shake Shack for the first time with my wife about a month and a half ago, and I brought my kid in there too. And you know what? They're really nice. I mean, the store is immaculate. It feels like a restaurant. It doesn't feel like a fast food type of business. But when I got the bill, and it's like, okay, well, I'm paying 15, like me, my wife, my kid, and me and my wife had, it's nice you can have a drink. So I had a beer, and my wife had, some type of alcoholic beverage as well. But I think the bill was $42, and we had burger, fries, and a couple of beers. And it's like, holy cow. I mean, this could never work in a rural area. I get it in Manhattan. I get it in the big cities where people don't mind paying $15, $20 for a hamburger and fries, but This would never work like down south where people are eating for $7, $8 still. I mean, there's so many areas this would not work. So it doesn't have that mass expansion appeal that something else might happen. And then you see, okay, well, if it's not going to massively expand, now you got a huge multiple here. And if it's not going to work in little cities, then I'm concerned there. So I'm kind of on board with you just from a fundamental. It's just the ticket. It was just too expensive. The burger's great tasting hamburger.
Small.
But was it greater than,
Yeah,
I eat at Five Guys too. And I can go into Five Guys and eat for probably $10, really, burger and fries. And the burger's just as good. Or you can go to like a Rally's. Rally's got a pretty good burger too. Now that's a fast food joint. But you eat for $5, $6, you can get a combo. So it's all that pricing point. It's a big city thing. And if it's not working in the big cities, like you're saying, Philadelphia, that's even more concerning.
Well, I agree with you, but remember, you are standing online to buy this expensive food, as tasty as it is, and so it is a fast food experience. And when Shake Shack opened in Philadelphia, it's just down from our office, there were lines out the door because the mystique was there. There was I took a picture of it and sent it to a couple of people to say, this is a real tell. This is a short sale ahead of the earnings. Now, you know what? They could report some better than expected numbers, and the stock could rally 20% because there probably are some shorts in the stock. That's why you use options. If you can find a good, inexpensive put, it's almost like a binary trade. Either it fails and you take a small loss, or they report disappointing numbers, the stock gaps down 20%, and you make 2 or 3x on your put trade. So to me, that's the way to trade an event like this. Long term, I don't want to own the stock. It's just too rich.
All right, we've been on with Marc Chaikin, Chaikin Analytics, giving us a couple long ideas, and a short idea doesn't always give us those. Marc, thanks so much for the time. Have a good rest of your week.
You too. Enjoyed it, guys.
All right. 8:27 now. You guys want to go head back to the earnings parade or what?
All
right.
Yeah, let's go back. There's just a ton of stocks reported. What about this TripAdvisor?
Yeah.
I mean, they are showing Expedia Priceline how to get it done. Give us those numbers for Trip, because Joel talked about the 34 support.
Jeez.
Man, Joel, it's up 14, 13
they
points.
Gave you
from that
all
34
day
support.
to get in that. Yeah, it didn't.
The Rock of Gibraltar down there, that 34. So many chances to get in, and it is off to the races here now. Thoughts here, Spencer? Give us the numbers, and let's break into the technical details.
TripAdvisor Q4 adjusted EPS of 6 cents. I actually don't think they had an estimate, or I don't know what it was. The total sales of $321 million. And I don't see the estimates in front of me, but they must have both been beats, because the stock is flying.
Price don't lie. Price don't lie.
Wow.
Joel, that's your cue.
Okay. Thank you, Q-Man. 49.85 is your pre-market high. After hours high, Dennis, to get it correct. Now just kind of a slow leak, nothing major. Your lowest level since hitting at 49.53 is 45.40. So I would definitely cut out if it took out 45.40. And just a lot of price discovery going on right here at $48, 47.5, 48. So let's see what way it shakes out. For me, if I had, long, going back 35, 40 or whatever, may be a good opportunity to ring the register. A big level like $50 could come into play today. If you're a long-term holder, just let it go. I mean, this thing was all-time high at 111.24. Recent low of the move at 29.50. So you can do the retracement on that, and it's
could have a long ways. It's got a lot of room to the upside, is what you're still saying when you consider those all-time highs.
Yep, for sure.
20 seconds here. We got a number? We got a number today?
Yeah, we got
have anything today?
PPI, right, Brentster? Yeah, PPI. So
should I get ready to trade this? Is this one going to fall 25 handles right now?
Yeah, to your battle station, Dennis. 27.
I go to my battle station on this next number because I saw what happened with that CPI. Okay, see you in a minute.
You look like a deer in headlights when that started to move the other day. 27.07. That's where we're trading now, bouncing around. 06 is your last print. Spencer, maybe go to a minute chart here in the spoos to get some action. Didn't even give you guys mid-range on the session. That's always something I'd like to look at after a big move overnight. 1950 is your high. I think that could be safe for now. moments away. 27. Woo, we're hanging out right in the mid-range of the day, folks.
We have initial jobless claims here. I'll just go through the whole thing. So core PPI month over month, January, 0.4% versus 0.2%. Estimate the prior reading was down 0.1%. So good core PPI number month over month, year over year for January, 2.2% versus 2.1%. So that's higher than expected as well. Initial jobless claims for February, 230,000, which was the estimate, and continuing jobless claims also pretty much in line. We also have the Philadelphia Fed Manufacturing Index, which is coming. I mean, I can't believe I'm reading off all of this econ data now. I've never done this before. This is bizarre. What was I reading? Philadelphia Fed Manufacturing Index for February, 25.8 versus 21.1 estimated. So everything coming in higher than expected.
You know what? It shopped, actually. I wanted to say something on the SPY. I was looking at the quote. We went 40 cents wide when that number came out. Everybody pulled their bids and offers. We went 40 cents wide on the SPY. That's 4 handles wide. Did we do that in the futures? Futures go 4 handles wide there?
No way. That would be
we went 40 cents wide on the SPY. I saw it. We were 270, 10 to 270. Almost 5 handles, 270, 10 to 270, 60. So 50 cents. You know, and I'm saying handles because it's the equivalent to S&P futures. So I shouldn't say handles, because it's $270, but basically equivalent to 5 handles wide on the E-mini is what we went on the SPY.
You know why? Because,
right on the number.
Yeah.
They pulled it all. There was no bids or offer. Liquidity gone. People scared on those numbers right now after that CPI.
Yeah. And also,
anyways, we dipped a little bit, but it's kind of been crickets here.
Yeah, they're waiting for the S&Ps because that's the true market. And then when the S&Ps make their move, then people come into the spiders, and then kind of the lagging indicator, Dennis. You know how that goes. 0650 is the point of control here for me. That's mid-range on the session. I mean, you got to look at it, folks. We're 12 points off our high and 12 points towards the low. So 27.0650, that's my area. It needs to get above that to hold. 833, boy, blood on the streets, and NTAP. I'm assuming either not a good report or horrible guidance.
NetApp reporting yesterday, Q3 adjusted EPS 99 cents, which was an 8-cent beat. Sales of 1.52 versus 1.5. So good Q4 numbers. The guidance was actually not terrible for Q4. The current quarter Q4 adjusted EPS guidance 95 cents to $1.03 versus a $1 estimate. So as far as numbers go, initially I don't see anything that could justify the move it's had today, but I didn't look too closely at the report.
They're hitting
Thoughts?
it. Yeah. I mean, you know how we looked at that Twilio chart yesterday, and it just kind of looked like it had more room to do on the upside, even though it had a dip on the open. This one kind of looks like it has more work to do on the downside here. Your initial spike low was to 53.30, bounce over 55, but now you're starting to fade again. You got some lows to lean on here, 52.50. You have a double bottom there from November, but underneath that, you have a low at 51.31. And then the real scary thing is, and we won't get there today, but you got a gap to fill to 46.09. So if I was short, maybe I'd be nibbling at the pre-market low, but to initiate a long, I think I'd have to wait another day or two. And I just wanted to make a comment, that Spencer made, like, wow, I'm looking at econ data, how we were paying. And that's just cycles of the market, right, Dennis? I mean, there are times when the unemployment was a big thing, and now the focus is worrying about interest rates and inflation. 100 years ago, when I followed the markets with my dad, it was the M1 money supply. So just like you have to adapt your strategies in the markets, there's different numbers, there's different indicators that are going to move the markets. And right now it's the CPI and the inflation data, because that's going to determine where interest rates go.
I mean, really, when these numbers, there hasn't been movement on any numbers except the jobs number for years. But because this market is so kind of still spooked a bit from what happened, they're watching all these numbers, watching any new information, and trading aggressively on it. And that's why you saw the huge fall in the CPI number, which was a great call by you to say that we were going to get that kind of movement, because I didn't expect it. But now I'm watching all those numbers too. And somebody was watching this PPI number as well. Like I said, we went 50 cents wide on the SPY on, and the difference when I say 50 cents, why? I mean, that's the difference between the bid and the ask. Normally SPY in the pre-market is 2 or 3 cent spread. 50-cent spread, that's incredible. So you had every high frequency market maker saying, no, we're not sitting there and getting picked off like we did in the CPI just, yesterday there. We're not going to get picked off this time. So they backed off the quotes. And obviously now they've moved back in now that it looks like it's safe. But that's the thing. And it's not that bad thing. I mean, if you're a market maker and you're going for a couple cents here, a couple cents there, you can't be losing dollars on numbers. So you got to back off. That's the way the business works.
All right, 8:35. We're going to take a quick break and grab Christian Magoon, the CEO of Amplify ETFs, to talk about the blockchain ETF BLOK.
I just want to say one more thing.
Yeah.
Dennis, you're giving me a ton of credit on that CPI data, but Spinner was talking about it. Other people were talking about it, so I appreciate that.
The chat's really helpful.
Yeah, Spinner's good. Spinner's good with his fundamentals and his technicals too. So it just wasn't me that was looking at that number.
All
okay,
right.
Spencer, go ahead.
We'll be right back. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick, and we are on the line with Christian Magoon, CEO of Amplify ETFs. Christian, how's it going today?
Hey, I'm doing well, Spencer. How are you doing?
Doing well. So, Christian, tell us a little bit about the blockchain ETF ticker. I'll pull up the chart up on the screen. BLOK is the ticker, the new fund from Amplify. Tell us a little bit about how that works.
Yeah, so this is the largest in terms of assets and largest traded blockchain-focused ETF. And essentially, it's an actively managed ETF that goes out and is looking for companies that kind of fit in 3 criteria. Kind of the leading companies that are investing in private companies that are working on blockchain technology, the leading companies that are involved in the research and development of blockchain technology, and then the companies that are leading in current receipt of revenue from blockchain business activities. So it's a globally diverse portfolio of about 50 companies. About 70% are U.S. North American based, and the rest are overseas, primarily in Europe and Asia.
We were talking with Eric Irvin from Reality Shares last week about the BLCN, and that fund is passively managed. Yours is more actively managed. Explain why you went that route.
Yeah, we think that blockchain space is developing so rapidly that you can't buy and hold in this area for 6 months at a time. And the other index-based ETFs that focus on blockchain are only reconstituting twice a year, meaning they're only changing what they can buy and sell twice a year. We were the first to file for our ETF in the blockchain space and really took a look at both methods. We had a clean slate and felt like having a manager that was looking at this universe on a day-to-day basis so they could be responsive both to the opportunities on the upside, but also the risks on the downside made a lot of sense. So we're bringing some expertise here, a portfolio management research team that are monitoring this day in and day out. And we think that's very appropriate for how quickly this blockchain space is changing, Spencer.
I'm looking at your list of holdings there, and I'm seeing some, in terms of exposure, obviously you're exposed to the tech sector, but I'm seeing some financials in there. I'm seeing a variety of sectors, in the fund. Explain sort of like how, you mentioned the criteria already, but it's so diversified. I guess, how did you get that? Like, how did you get that way, or why?
Yeah, it's kind of surprising when people take a look at it. We've got, looking just at like the top 10 holdings, we've got several semiconductor companies in there. So, for example, Taiwan Semiconductor, they've done over $1.5 billion of revenue from selling chips to Bitcoin miners. So they're in the portfolio because of their actual revenue defined from blockchain related work. Then you see companies like NVIDIA is included in there, by the way, as well. Then you see companies like Digital Garage or Overstock or GMO Internet, SBI Holdings. These are all groups that are in some way running exchanges for cryptocurrencies or doing mining. So they are, tend to be more on the tech side. But then, you go further down the list and you'll see a company like a Goldman Sachs or a Citigroup. Goldman Sachs and Citigroup are both two of the top 5 investors in the world in private blockchain companies and technology. So, this kind of approach saying, hey, who do we think is going to be a winner in blockchain going into the future? The answer is we don't know, but we can look at leading indicators. We think leading indicators are the largest investors in blockchain today from a corporate standpoint, the groups that are doing the most research, and then companies that are already receiving revenue from blockchain-related activities. So, yeah, you get a fairly diversified portfolio here, not only by country, but by industry as well, from financials to technology. I think it's a quite unique approach. One thing that sets Block, the ETF, apart from some of its others competitors is that it tends to have more small cap exposure, and it tends to be more concentrated as well. That goes again back to the fact that it's actively managed. We don't have to buy and hold for 6 months at a time. So we have more flexibility on owning smaller companies and having a bit more concentrated portfolio.
Question from the chat here. Is there a management expense ratio?
Yeah, so the management fee on the ETF is 70 basis points. That compares to the other index products at 65 basis points. So we knew we were going to have a little bit more expense, but we do think having day-to-day portfolio management and being able to buy and sell companies on news should provide much more value than the 5 basis points difference between the expense ratio on the index products versus the active products.
What kind of research are you and the fund managers doing to learn more about the blockchain space for anyone who wants to learn more about it? How do you guys do your research?
Yeah, so the portfolio manager is Taroso Investments. They're a registered investment advisor. Mike Venuto is chief investment officer there, formerly portfolio manager of Horizons Investments, and as well as chief investment strategist at Global X, who's been in the news this week. So he and his RIA firm have been investing in blockchain securities as well as some cryptocurrency opportunities for a number of years and really kind of specialize in that area. In addition to them, we have 2 research partners. First is Emerita Capital out of the Bay Area, which is a blockchain research and development firm. They really specialize in that industry and are kind of instrumental as being a research partner for kind of technological updates and even looking at a lot of the white papers regarding blockchain and cryptocurrency applications. And then EQM Indexes as well as a research provider. They actually have created a blockchain 50 index where they basically classify the leading companies that are investing, researching, or developing blockchain. So we've kind of got a robust group here of investment people. These aren't celebrity spokesperson people. These aren't, people sending out a tweet because they're, an early investor in Bitcoin and want to promote the ETF. These are all research and investment people that are looking at the blockchain space, really trying to help the ETF get the best possible access kind of to the future of blockchain.
I want to ask you the same question I asked Eric Irvin last week. So, all these companies coming out with their own blockchain solutions. We've had Riot Blockchain, Kodak Coin, Long Island Iced Tea, or I guess Long Blockchain. How does your team determine a good potential blockchain, a good use of the blockchain from a frivolous headline?
Yeah, so that's a big reason we think active management is important. very hard to have a strict rules-based process, an index that you are able to create that, is not going to be fooled at some point by many of these different types of models, coins, business lines that are being introduced quite often in blockchain. So we think you need to have a human element that actually goes in and looks at the business use case for a company that announces that they're going to be doing a project in this area. Not only looking at the business use case, but looking at the personnel or partnerships that they have associated with it. So, from a beginning standpoint, we wouldn't own something like Long Island Iced Tea just because it's quickly apparent that they're really using kind of blockchain as a naming tool to, improve their market cap position. They really don't have a business use case. Somebody like Kodak is another example. They announced it. We were able to look at their business use case and actually find some partners and people associated with it who have some experience around the cryptocurrency space. And in fact, we do have a position in Kodak. In fact, that position went up 40% since the fund launched, and it's been pared back some to a minimum position of about 50 basis points. So, these three kind of groups, the portfolio manager and our two research partners, are going in and looking at that. This group recently had a conversation with the CEO of Riot Blockchain after doing some due diligence and looking at their business use case. There was further questions. The team did something an index can't do, and actually scheduled a call with senior management, spoke with them. After the call, the fund initiated a position, a small one, about 50 basis points in Riot Blockchain, because they were able to answer some of the questions that still remained after doing the research. So I think this is the value you get from an actively managed product that's really digging in to the weeds, and it can't be fooled because it has preset rules that can be gamed. And ultimately, we think that's going to make for a better way to play blockchain. The funny thing is, we've had a couple advisors say, "Hey, your fund is going to be front running all the other funds." We said, "What do you mean?" I said, "Well, you're going to be able to buy things on day one, and many of these other funds might not buy it for 3-6 months until they actually reconstitute their portfolio." So in some ways, maybe there's a good benefit to having some other index ETF products out there to buy what we already own in the blockchain space.
But it's hard, to do research on a, it's almost like analyzing, the internet in 1995. It's hard to do research on an industry that is so young. So are you guys looking at, just the business plans here, or are you looking at the source code for how they're going to use the blockchain? Like, how is that part of it?
Yeah, there is actually. We do have some ability to look at the source code through our partner at Emerita Capital. So they have those capabilities. They're a specialist kind of technically in uses of blockchain and cryptocurrencies. So they bring that ability to the table. I mean, if you've ever seen any of these white papers for some of the ICOs or cryptocurrencies, related to blockchain uses, they're quite detailed. On the other side, EQM Indexes, who is run by Jane Edmondson, who's a former AllianceBernstein portfolio manager. She has the ability to get into company fundamentals and actually look at a company like Taiwan Semiconductor, NVIDIA, and really be able to see what type of revenue are they specifically generating from selling GPUs and semiconductors to Bitcoin miners, the computers that are essentially doing the verification work. So we've got kind of an interesting technical crew, and then on top of this all is Troso Asset Management, who's a registered investment advisor and portfolio manager, and really fits this all together and looks at kind of risk levels and controls. One thing that we've seen is some of these stocks can run quite a bit in a hurry, and not being able to do a rebalance for a quarter or reconstitution for 6 months can really skew some of the weightings in the portfolio in a way that you may be exposed 2 or 3 times more 3 or 4 months in after a rebalance or reconstitution to a stock that maybe you want to take some profits on. So the manager can kind of scale in and scale out of positions. As you know, the index usually is all in or all out of a blockchain company. And we just don't think that's the right way to play it, given how dynamic this space is. So, the easiest way to sell an ETF today is to call yourself an index. And we looked at doing that, but we just didn't think it was the right approach. We definitely took a little bit more of a quote unquote risky position in terms of product development and say, hey, no, we think we're going to have this robust team in place that can act on a daily basis. And, we think so far the results are good. The block ETF is the largest blockchain ETF and most traded out there. And, we think that over time, we're going to see some continued market leadership from that area. Certainly every day we're seeing news stories about blockchain, and we just think you have to, take a common sense approach. One advisor said, hey, you don't brush your teeth twice a year. You shouldn't buy and sell blockchain stocks only twice a year. So I think we agree on that point.
All right, last question, Christian, and I'll let you go. Obviously, blockchain is not just about cryptos, but it includes cryptocurrencies within the overall blockchain sphere. Do you have any exposure to power companies as people who are aggressively mining cryptocurrencies use a lot of power?
Yeah, Spencer, it's a great question because that's a big dilemma, and there's some lightning technology being worked on the Bitcoin specific side that may help kind of take this big power issue down quite a bit. But right now we don't. What we would need to have for a power company to be included is they'd have to actually distinguish some of their revenue or demand from blockchain related miners or applications. So far, there aren't any companies that are doing that, breaking it out. This would be akin to why we own some of the semiconductor companies who are breaking out their blockchain or Bitcoin mining chip revenue. So we would need to see that from a power company to be able to include them in the portfolio. But we continue to look into this area because it's potentially one of the big hurdles or drawbacks for blockchain, that it's so intensive on the power grid. So I think you're onto something there. We're keeping an eye on it. We just want to make sure that there's some type of direct connection we can show to kind of this blockchain technology, whether that's a numbers connection, meaning they're receiving actual revenue there, or maybe they're doing some investment into some type of power technology directly related to blockchain or miners. That's something we're going to continue to keep an eye on. But as of right now, no power companies in the blockchain ETF. One thing I just point out too is there has been some concern that is this portfolio kind of repackaged financials and technology. And I think it's a valid question. Always, when you're looking at an emerging area, you're having to own companies that are large and have, generally a lot of cash and maybe research. So there are leaders in that emerging area, but they're not necessarily only focused in that area. And, we took a look at it, looked at XLK and XLF, the technology and financials ETF, looked at an equal weighting of both of those and the overlap between that 50-50 XLK, XLF ETF mix versus block was 23% in terms of portfolio weighting. So we think this is an additive portfolio. And as companies spin off or IPO, this is going to become more and more unique as a way to play the blockchain kind of ecosphere through the BLOK ETF.
We're even on the line with Christian Magoon from Amplify ETFs. He's been talking about the blockchain ETF ticker BLOK. Christian, thanks so much for your time today.
Hey, thanks for having me, Spencer. Take care.
Right. Okay, 8:54, guys. Where should we go next? You want to do some imbalances, get back to the earnings parade?
A lot we haven't talked about. Yeah, I'll quickly give you the imbalances. Alibaba, just a monster move there yesterday, continuing today. 111,000 shares to buy in Alibaba. Everybody jumping hand over fist into this thing on the pullback, and obviously now being rewarded for that. Twitter, 58,000 to buy. That's slightly higher here. Good day for Twitter last couple of days, bouncing back actually after it had gotten a little bit of giving back some of the money from its earnings, but now actually in rally mode here once again. Bank of America, 175,000 shares to buy. Few sell imbalances there. They're sporadic, but they're still really, this market is just looking like it wants to go here again. Yep. Square, 96,000, 106,000 to buy here now in SQ. So you're seeing a lot of strength across the board from the imbalances as well.
Hey, Dennis, is there an iceberg out here in Bank of America at 32.38?
I haven't been watching the trading. The reason Bank of America is trading up more than the other banks, if you missed the headline last night, they got a headline with Amazon that they're going to be working with Amazon. What's the details here, Spencer?
Right. So Amazon Lending, which has been around for, I don't know, like 6 or 7 years at this point, they've now partnered with Bank of America, who will be like the lending partner for Amazon Lending.
So BAC has a partnership with Amazon that was announced there last night, and that is why BAC got a big lift last night just on that news, and it's obviously holding those gains here this morning.
Can you take a look, Dennis?
At the book.
Yeah, no, not so much at the book, but I mean, I've been watching this thing since last night after the close, and it's just, I mean, there's either iceberg buyer or iceberg seller here or something at 32.
Maybe both.
Yeah, really. Pre-market high is 32.45. That exceeds yesterday's high. Really, if you want to get excited here, maybe 32.67 could come into play. That's been the high of the move, and that was flanked by a 32.50 high. So doesn't look like Bank of America is ready to give it back yet.
I'm just looking through the book. There's size. Once you get up to 32.50, it's littered with size. And why is that? Because the stock hasn't been up that high of a price for a long time. Like we've had the 32.67 high, but if we go back, you got to go out to the monthly charts here, and you got to go back years. And what happens is you just have institutions that will sell when prices are hitting all-time highs on big, thick stocks like this. So 32, just give you some size in the book. 32.50, 111,000 to sell at 32.50. Another 100,000 to sell at 32.59. Another 60,000 to sell at 32.66. Another 80,000 to sell at 32.80. And there's big sizes, 20,000 share lots all through there too. And then at the big point 33, there's 220,000 shares. It's early here yet. That book is not full. It's going to fill up a lot more in the next half an hour. But you can say once you get above 32.50, it's really tough sledding for Bank of America. So almost looking at this like, yeah, maybe you can choose through some of that, but it's a big move for it already. It's kind of opening into resistance.
And do you remember when Mr. Buffett came up with his idea to invest in Bank of America?
Well, right at the bottom, wasn't it?
Yeah, but you remember, like, when he came on CNBC, he said he was, like, in his bathtub or something.
Yeah, I do remember
that.
So he's sitting in his bathtub dreaming these scenarios up.
I think it was, like, it's $6 or something.
Sitting in his bathtub, drinking a Coke.
Diet, yeah, Coke, and having an Egg McMuffin or whatever. Egg and sausage is what he has for breakfast every day.
Can I go back to NetApp for 1 second? We had covered the earnings, and I said, I didn't really have any insight as to why the stock was trading, had reacted so poorly. Well, Bank of America analyst suggested that it was because of margin concerns, and he views those concerns as overblown, and this downside is a buying opportunity for NetApp. That's according to one analyst. So, one person's opinion, but it's more insight than I could have given on why the stock had been down this morning.
I mean, buy the dip has worked. Is it going to work in this one? Maybe. I always think I like to wait for the dust to settle. When they go down on a fundamental reason, a lot of times it takes another fundamental reason to kickstart them on the way up. So I'm kind of hands off here on NetApp, even though it's down significantly. Yes, it could bounce back, but when you're always trying to just pick the bottom, it's a tough game. It's tough business to stay in business, just trying to call the bottom all the time. I'd always say the trend is your friend. Trend broke here significantly. You got to think of this starts clawing its way back. Now you got 55 as probably major resistance point. So it's not that easy to just come right back here on NetApp. It's not like it's just trade a few shares. It's trade 113,000 shares already this morning down here. It was trading actually last night, significant size down here as well. So this is getting marked down here hard now. And I don't think it just bounces right back.
Just a quick comment. Ed Parker is talking about GBTC looking for a return to $20. Dennis, have you been getting it? You haven't been trading that at all since the split,
I don't trade stuff.
No, I mean,
I don't. I'm not a big. I've said it a million times. I'm just not a Bitcoin fan.
Okay,
so I'm not a Bitcoin fan. I'm not going to trade the Bitcoin Investment Trust. I don't even look at it. The way I look at Bitcoin, I've said it a million times on the show, I don't know how to value it because there's no cash flows, there's no dividends, there's no country to look at that's issuing this that you can look at the strength of the country like you can with a traditional currency. There's nothing to look at. It's digital numbers on a computer screen. So it's going to trade technical. I guess you can look at the technicals. That's all you got. I don't trade purely technical. We know that if you've been listening to the show for a while. I use technicals as one tool in my toolbox, but it's not even one of the biggest tools. I like to look at, valuation. I like to look at order flow. Sentiment you can look at to a certain extent with Bitcoin. What's the sentiment towards it? But I can't, jump on board here on the crypto train.
Okay.
I'm not a believer in crypto.
You're not
That's
the
my
only
own
one. Do you know how many contracts the Merc traded yesterday in Bitcoin? And
Plenty.
what the open interest is?
No, I have no idea.
One.
What?
One.
What do you mean one?
They traded one contract yesterday.
No.
Yes.
What do you mean one contract? The Merc only traded one contract of Bitcoin yesterday?
Yes.
Is that correct?
Yes. Yes. And the day before, it did not trade any.
Is that for real?
Yeah.
Is that stats for real? Like they have a listed thing that's not trading at all?
Yeah.
For real?
Yeah.
No, can't be. For real?
Yes, for real. And you want to hear another interesting thing too? The SIBO contract, which is smaller, that got off, it had a good start, right? And it got up. Well, listen to this. It got up to 11,000 on February 2nd, then it traded 10,000. And then when the market got wild, they just totally ignored it. On the 12th, it traded 822 contracts. And now it's back up to 2,600. So
this is the one Bitcoin per contract.
This is the one, which is
right.
much more manageable. But it looks like when the market started heating up, they're like, hell, I'm not trading this. I'm going over to the equities. Now the volume is starting to come back a little bit in it. It has an open interest at 3,000. But boy,
well, when you're trading one contract, does that make you think that they're just gonna like get rid of it?
I don't know.
On the big one?
I don't know.
How many? Oh, so it's one. How many does that? How many Bitcoins is that?
5.
5?
Yeah.
5?
Yeah.
People just don't want to trade that kind of size.
Yeah.
It's got to be too hard to arb with too, probably. Like, you know what it is? Like, it's probably just thinner. Like, I know there's volume there, but the volume is probably, I don't trade Bitcoin, so I can't, and I'm just guessing. But it's probably just the arb is just not there. Maybe the volume on the other side to go into the actual exchanges and try to find it is not there. So it makes it so tricky. And I mean, obviously, you got the arbs that make the volume up and the liquidity up in it. I don't know. I've been saying this for a while. I just don't think the big institutional traders coming.
They're not.
And that's telling me the same thing. So what continues to drive this besides hope? What continues to drive this besides, retail? And retail can drive markets. We know that. The last market has been driven by retail. But really, when you think about it, it's big institutional money that really moves. And I don't know. There's so much other funny stuff that can happen in Bitcoin. It's just, and when I don't see the big players coming in, that makes me, even more scared than I already am.
It's rallying back. It had that 6,000 low.
But what's to say, like, how do we know it's not being manipulated here again? And there was the paper written that said, the move from 100 to 1,000 was all manipulative by one account. I don't know if that's true or not, but that's what the allegations in that paper was. And what's to say, you're not getting some manipulation here again? I mean, unregulated markets, every market gets manipulated to a certain extent, even regulated markets. But when you have unregulated markets, it's a free-for-all, man, for manipulation. So I can guarantee you there's some manipulative activity happening in that. I just don't know if it's enough, like, to push the price up to here. Is it hope or is it manipulation driving it higher again? It's so tricky to say. I mean, either way, if you're trading it, you bought at 7,000, you can sell 10, good stuff. You can make some money with it. But I just coming in here and saying that this is the future currency and this is all being driven. The institutional money is kind of making their say by that stat you just gave me, and they're saying they're not involved. And how does it really go to 100,000 or 1 million without institutional money? Unless it changes the mind of every institution that's out there. I don't see how you can ever get into these pricing points with somebody had a projection of $1 million for a Bitcoin.
Canadian government is trialing Ethereum network for public ledgers. So,
and maybe there's something to some of these currencies. I'm not saying there isn't anything like that they're all going to be worthless. I just I can't figure out how to value them. That's why I'm out. So I'm not saying the value of these things is zero. I'm also not saying the value, like when somebody's coming up with a target for Bitcoin of $1 million, you can quick do the math on that. So you got 21 million Bitcoins potentially out there. Eventually, this guy, I forget which analyst was saying that, with pricing it out, but that is what 21 million times $1 million a coin is what? Like, is that like
that's
trillion
above my air math capability.
Well, I know it's air math. It is above our air math, but I did the math once. I can't remember what it was, but it worked out to like 10% of the wealth in all the entire world. So you're saying 10% of the world's wealth is going to be in Bitcoin. Maybe if you think it's going to be the world currency, but that just seems asinine to me.
All right, real quick, Dennis, we're going overtime here. We're keeping our listeners here. Spoos are working their way up to that pre-market high at 1950. Above that, 26.75. That's the highest you've been since you reached 25.29. So maybe we're coming to a little bit of a top of a trading range. Above that, things are wide open. Your 8-day highs, not to 27.63. Spencer, you want to wrap things up?
Well, there's two upgrades I want to mention real quick, and Dennis, pay attention to one of them. So first one, Salesforce catching an upgrade this morning from Jefferies, hold to buy ahead of earnings. They report earnings at the end of the month on the 28th. So it's always interesting to see an upgrade heading into earnings. Second one, Dennis, pay attention. Solar Edge catching the upgrade from Vertical Research. That's Gordon Johnson upgrading from hold to buy this morning.
We love Gordon.
SEDG getting the Gordon upgrade to buy this morning. So I know you.
I wish he would have got it yesterday. So he waited for the earnings report. The earnings are obviously good. The stock's trading up 17% here this morning. You know me, I can't chase the stock up 17%, but I'm happy. Gordo, I always do follow him, and he does do pretty well with these calls. So we got to pay attention to those ones.
Well, I figured you'd want to know that.
All-time high is 43 even in SEDG. So watch that higher open, and if it keeps going, comes back down through that open, that might be a little bit of a lower risk short. I think Matt Curtin in the Google chat is maybe looking to play that for a short.
All right. That is our show for the day. Thanks to all you who joined us. On tomorrow's show, we are joined by Victor Anthony, Managing Director and Equity Analyst at Aegis Capital. Thanks to our guests today, Christian Magoon and Marc Chaikin. Thanks to all of you who joined us in our Google chat and our premarket.benzinga.com chat. Hope you all have a good rest of your day, and we will see you folks on Friday.